All right, so let's jump right into it today. We're going to kind of do a deep dive into the world of billionaire investor Bill Ackman. We've got this really interesting article from the Motley Fool that's going to help guide us here. One of the things that really caught my eye was just how these aren't just, kind of your average stock picks. We're talking about predictions of over 20% growth by the end of next year for some of these. So I guess the big question here is, which two companies are these analysts thinking are going to just skyrocket? And I guess even more interestingly, do those align with the stocks that Ackman himself is holding on to?
Yeah, it's interesting to consider how Ackman approaches his portfolio,
Yeah.
especially compared to like the common advice about, the benefits of diversification. He holds only 10 stocks total in his portfolio.
Yeah. Wow, that's pretty wild. It definitely makes you wonder if there's something to that level of conviction in just a few companies. So let's get into the specifics then. So analysts are predicting some really big things for Canadian Pacific, Kansas City Limited. It's a railroad company. And then also Restaurant Brands International. Now they're the company behind a lot of big names: Burger King, Tim Hortons, Popeyes, and Firehouse Subs. So we're talking potential growth of over 20% by the end of 2025. It's a pretty significant jump.
Yeah, it is. And I think when we look at the bigger economic landscape, we can kind of see why these companies are attracting so much attention. Canadian Pacific, Kansas City Limited, they're in a great position to benefit from the increasing demand for rail transportation. And especially this is true when we consider cross-border trade between the U.S., Canada, and Mexico. I mean, the amount of stuff that moves between those countries is enormous, and it just keeps growing. And then for Restaurant Brands International, their growth potential seems to be tied to a couple key factors. You've got international expansion, especially in markets where fast food's becoming more and more popular. And then also you've got the potential easing of inflation. I mean, if consumers have more disposable income, they're probably going to be a little bit more likely to spend it on things like burgers and fries.
Yeah, that definitely makes sense. But here's where things get kind of interesting. So Ackman, he actually decreased his stake in both of these companies. And this all happened during the third quarter of 2024. So this kind of raises the question, does this go against what all the analysts are predicting? Is Ackman seeing something that maybe they're missing? Or is he, maybe making some strategic adjustments to his portfolio that are based on factors we're not really aware of?
Yeah, that's a great question. I mean, it highlights the fact that even though we have these predictions, the market is constantly changing. So Ackman, he might be responding to short-term things.
Yeah.
Or, he could be looking at a really long-term vision, one that goes way beyond, these immediate projections.
Yeah, definitely underscores that things are always in motion in the markets. Even the most successful investors are constantly evaluating and adapting to new information. But, of course, no investment comes without its risks. So let's take a look at some potential downsides for these two companies.
Okay, so for Canadian Pacific Kansas City Limited, I think the biggest concern is the possibility of U.S. tariffs on imports. If those tariffs are imposed, it could really disrupt cross-border trade. Let's say the U.S. imposes a 25% tariff on Canadian lumber. That would have a direct impact on their ability to transport goods across the border. And, for them, it could lead to decreased revenue.
Yeah, that's a huge part of their business model. So what about Restaurant Brands International? What kind of risks are they facing?
Well, for them, the big question mark is what's going to happen with inflation. So let's say even if it eases up a bit, will that actually be enough to drive a significant increase in spending at fast food restaurants? It's kind of a gamble. Even if people have a little bit more money to spend, will they choose to spend it on fast foods? Or are there other things that are going to be higher on their list?
Yeah, I think that's a valid point. We can't just assume that, just because inflation eases up, that it's going to mean more money spent on those fast food sales.
Exactly. It all depends on consumer behavior and broader economic trends.
That's right. It's really a complex picture.
And while we're kind of on the topic of these broader trends, it's worth noting that while all these analysts are really focused on those two companies, Canadian Pacific, Kansas City Limited, and Restaurant Brands International, Ackman has actually made some pretty significant investments in Alphabet. That's Google's parent company. And, I'm kind of curious to hear your perspective on those picks, especially considering your interest in AI and how it's becoming more and more important.
Yeah, you know me too well. I do find Alphabet to be a really intriguing company. I think it's impossible to ignore just how fast AI is growing and the role it's playing in shaping the world around us. And when you think about it, Google is at the forefront of that. You've got search algorithms, self-driving cars, all these incredible innovations. So to me, that signals huge potential for long-term growth.
Yeah, it's an interesting perspective. It suggests that maybe we shouldn't just focus on the numbers and the projections, but also think about the broader technological landscape and figure out which companies are going to be the leaders in these changes.
Absolutely. For me, it's all about recognizing those underlying trends and understanding how they're going to affect the future.
I agree. It's about looking beyond what's happening right now and considering what these technologies could mean in the long run. It's really interesting how this investment in Alphabet connects to the broader trend of AI. Kind of makes you wonder if we're at a point now where understanding these big technological shifts is as important as just, analyzing traditional financial stuff.
Yeah, it's something I've been thinking about a lot lately. I mean, we've seen just how fast technology can disrupt entire industries, it can create whole new markets, and just completely reshape the economic landscape. So, yeah, it almost seems short-sighted to ignore those forces when you're making decisions about investments.
Yeah, it really does make you wonder if we're entering this new era of investing where, understanding those trends and figuring out which companies are really driving those changes becomes like the most important thing.
Yeah. And it's not just about the technology itself either. It's about the companies that are actually developing and implementing it. Like with Alphabet. They have this incredible track record of innovation, plus they've got this vast pool of resources and a global reach that very few companies can match.
That's true. Their reach and resources definitely give them a big advantage when it comes to developing and deploying these groundbreaking technologies. But it also raises another interesting question. What about the potential risks of investing in a company that's already so dominant? Is there a point where a company becomes too big, too influential, and maybe even vulnerable to things like regulatory scrutiny or big shifts in the market?
Yeah, that's a really important point to consider. We've seen how even the most successful companies can struggle when they're hit with unexpected challenges, whether it's from competitors or changing consumer preferences or even government regulations.
Exactly. It's a reminder that diversification, even within a really focused portfolio like Ackman's, is still crucial. It's about spreading your risk across different sectors and companies. Even if you know those companies all share something in common, like a focus on AI or some other kind of technology.
And speaking of diversification, let's circle back to Ackman's other holdings for a second. You mentioned earlier that you were particularly interested in his stake in Hilton Worldwide Holdings. What was it about that investment that stood out to you?
Well, it's a bit of a contrarian play, which actually kind of fits with Ackman's overall approach. The travel industry has had to deal with some really big challenges in recent years, first
Yeah.
with the pandemic and then with the economic downturn that followed. But there's some signs that things are starting to rebound. People are eager to get back to traveling and experiencing the world again.
Makes sense. After being stuck at home for so long, people are definitely craving those experiences. Like opportunities to explore new places and reconnect with people, or even just to escape their daily routines.
Exactly. And Hilton, with its, global network of hotels and resorts, it's in a great position to benefit from that surge in travel demand. They offer so many different options, too. Everything from really luxurious accommodations to more budget-friendly choices. So they're catering to a really diverse customer base.
That's a good point. It seems like they've got a solid strategy for capturing a big chunk of that recovering market. I've also read that they've been putting a lot of money into technology, things to enhance the customer experience, like better online booking and more personalized services in the rooms.
That's right. They're not just relying on their existing brand and network. They're actually innovating to stay ahead of the curve and attract new customers, which could give them a real edge in the long run.
It sounds like they're finding that balance between taking advantage of the travel rebound while also setting themselves up for long-term success in an industry that's constantly changing.
Yeah, they are. It's a strategy that shows how important it is to be adaptable and to remember that even industries that have been around for a while are still evolving.
It definitely reminds us that we need to stay informed and pay attention to those shifting trends and, be willing to adjust our investment strategies along the way. But bringing it back to Ackman, are there any other interesting parts of his investment approach that you think are worth mentioning?
I think one of the things that's most interesting about Ackman is his focus on long-term value. He's not looking for those quick profits. He's investing in companies that he thinks have the potential to generate sustainable returns over a long period.
That seems to really fit with his concentrated portfolio strategy. I mean, if you're only investing in a few companies, you really have to believe in their long-term potential.
Exactly. It's not about chasing the latest fads or jumping on those short-term trends. It's about finding those companies with a solid foundation and a clear vision for the future, and, a track record of actually delivering value to their shareholders.
It's about seeing beyond all the hype and noise and finding those companies that are building something meaningful and lasting.
It is. And, that's a perspective that you can apply to a lot of things in life, not just investing. It's about focusing on the things that really matter, the things that have the potential to make a real difference.
It's about having that long-term vision and being patient enough to see those investments come to fruition, whether those are financial investments or, personal ones.
Yeah, I couldn't agree more. It's about understanding that real value takes time to build, whether we're talking about a company or a relationship or even a personal goal.
It's about having that faith in the process and the commitment to stay focused even when things get tough.
Exactly. And that's such a valuable lesson to keep in mind, both in our investment decisions and in our everyday lives.
I think that's the perfect way to transition into a discussion about how important it is to align our investments with our personal values and beliefs.
Yeah, that's a topic I always enjoy talking about. After all, investing isn't just about making as much money as possible. It's also about supporting the companies and causes that align with our vision for the future.
Absolutely. It's about using our financial resources to help create a world that reflects what we believe in.
Yeah, it is. And I think we're seeing a lot more people moving in this direction, with investors looking for companies that are not only profitable, but also environmentally and socially responsible.
It's exciting to see this shift towards a more conscious and ethical approach to investing. I think people are starting to realize that their investments have power and that they can be used to drive positive change and contribute to a more sustainable and just world.
Yeah, it really is inspiring to see how investors are starting to pay more attention to the impact their money has, beyond just the financial returns.
Yeah, it's definitely a big shift. And it makes you think about how these changing values are going to affect companies. Those companies that are focused on sustainability and ethical practices, they're going to be the ones that attract investors who share those values. Exactly. And that's where it becomes really powerful. When investors actually start putting their money where their values are, it sends a message to the market that these issues are important. And it can actually lead to real change in how companies operate.
That's a great point. It's like a positive feedback loop. Companies see that investors are rewarding sustainable practices, so they have more incentive to adopt those practices, which then attracts even more investors. Everybody wins.
It's like this domino effect, and I think that's what's so exciting about this whole movement. It's not just about individuals making responsible choices. It's about creating a system-wide shift that can impact the entire economy.
Yeah, it's a really fascinating example of how individual actions can come together and create a bigger movement for positive change. And it makes you wonder what other trends are going to emerge in the future, things that could completely reshape the investment landscape.
It definitely keeps things interesting. But before we get too carried away, I want to make sure we circle back to our main focus today, Bill Ackman. We've talked about his stock picks and his unique investment style. And we even touched on his investment in Hilton, which you found particularly interesting. So before we wrap things up, are there any final thoughts or insights about Ackman's approach that you'd like to leave our listeners with?
I think one of the key takeaways from looking at Ackman's portfolio is that there's really no one right way to invest. He's shown that it's possible to be successful by doing things differently, by not following the crowd, by having a concentrated portfolio, and by making those big bets on companies that you really believe in.
Yeah, it's a good reminder that we don't have to follow the herd. We can do our own research and make decisions that feel right for us, even if they're not what everyone else is doing.
Absolutely. And I think that's an important message for any investor. No matter how much experience they have or how big their portfolio is, it's about being informed and engaged, and ultimately trusting your own judgment.
So as we wrap up our deep dive into Bill Ackman's world, what's the one piece of advice you would give our listeners as they continue on their own investment journeys?
I would say embrace curiosity. Don't be afraid to ask questions, challenge those assumptions, and really dig deep into the companies and industries that interest you. The more you learn, the more confident you'll become in making those decisions. Decisions that are aligned with your goals and your values.
That's great advice. It's about approaching investing as an ongoing journey of learning and discovery.
Exactly. And who knows what you might find along the way. Maybe you'll uncover a hidden gem, or a company that perfectly matches your vision for the future, or even a whole new investment strategy that changes your entire approach.
And for those who are just starting out, remember that investing doesn't have to be scary. There are tons of resources out there to help you learn the basics, understand different investment options, and develop your own investment philosophy.
That's so true. Don't let all the jargon and complexity of the financial world intimidate you. Take it one step at a time. Find some good resources and guidance, and most importantly, enjoy the process.
Well said. And with that, we've reached the end of our deep dive into the world of Bill Ackman. We hope you've gained some valuable insights today, maybe even sparked some new ideas, and perhaps discovered a newfound passion for investing.
Happy investing, everyone. And remember, the journey is just as important as the destination.